All right. Good evening, good peoples. Bruce with Targeted Wealth Creation back at you. All right. I got a lot in this upcoming series of commodities, precious metal, gold, silver, miners, uranium, um, platinum, about the cycles, the sectors within the cycles. So, the theme of this, if you guys haven't seen Fear, you should. Some of these places where people are heavily margin chasing these high yield max ETFs around tech, they're blowing up. Um, that's what margin will do to you when the market turns. So I want to use some of the tools that I use to showcase what's going on in the market. What do I expect? What are signs already showing? How can you shift your investments? And again, part of it depends if you want to be a growth player and buy the right sectors, sell those, take profits sometimes, come back in when they sell off, or do you still want to play the income game? So I prepared my material today to talk about both of those. What I'm going to be doing after this video is then deep diving if you want individual stocks, like which precious metals miners, what are my top 5, what are my top 10, what are my top 15, how do I get income versus just growth, which I've said. But bottom line here, let's recap. How do you survive these volatile markets? Well, I'm here to tell you, first off, I told you so. But this isn't your grandfather's normal pullback. We are now facing is a potential top in a 12-year bull cycle. So that means for a year and a half, 2, 5, you're not going to see very good performance out of what has been something you rode the back of. So again, I always say this, the guy that's out there, if you've got 30 years and you're just DCAing and you want to own get some weekly income in your 401k and you want to play the NASDAQ, the SPY, and those kind of things, you can do that. But please understand that there are bull and bear markets in the cycle. So you might catch a 3 year bearish trend in both the spiders and the NASDAQ 100. And let alone the Mag 7. So don't think that can't happen to you. Now, if you're a 30-year horizon, you'll get through that. But my offering to you is I always talk about something that's dear to me. So here I was in my early 50s, getting a divorce, making lots and lots of income in big tech after having been in there at that time 30 years. So I headed into the 90s. I saw these dot coms explode. I was working for a big large cap, one of the four horsemen of the internet, infrastructure providers like a Cisco, like a Microsoft. And we were just killing it. Well, 2000 happened. I was also trading and investing, and some of the gurus that I were following were saying, "Hey, the Nasdaq is going to go from 5,000 to 1,500." And I was, yeah, right. I've watched this thing for 10 years. I'm in big tech. You're crazy. I didn't listen, right? I thought they don't know that. How can they know that? And so when it crashed, I lost massive amounts of money on stock options that I was granted from the company and so forth. So all of a sudden, your 401k and the stock shares are giving you 15% below market that were up 200%. Or now, you know what? I don't have to tell you what happened. Just go look at the NASDAQ from 2000 to 2002. It was down about 82, 86%, peak to trough. And these things happen. They're just a reset. Why did that happen? Because you went through that boom cycle. I know the company I worked for, and I wasn't there. I was there in total of 12 years at 2010. I was only 98 when I joined them, but some of the guys that were there from the early 90s, I had, you know, engineers that were worth $4 and $5 million portfolios just on company stock that they were given over that, but to see that get cut in half depends on your age and when you're working. So, I was counting on all that. So going through a divorce that cost me a lot of money, I had to sell real estate and homes I owned and rentals and I was like, okay, I'm 50. What am I going to do for the next 10 years? So after I saw the crash in that around 2001, we were halfway into the crash. I said, how can I invest? What should I be in? So I went and I studied for like 60, 90 days. I was just like, I got to find where to go. It's not just which tech company anymore. And I discovered commodities, and then I discovered precious metals, and I said, oh, okay, gold's due to surge based on the 70s and where we are at 250 gold, $250 gold. This thing could 8x. This thing could go up to $2,000 or more over the next decade. People thought I was kind of nuts. I talked to my friends in the company. So I seriously started investing in that. And that's when I learned what's on this kind of a chart and what really happens. And guess what? We're entering the same kind of thing. It's just these tops in 12-year bull markets, they don't go down easily. They don't just one day flip a switch and just drop 80% in the next month. They give you many chances, right? I give it a 95% probability we've had a top. Okay. Now that top can get surpassed again, but it might be 3 to 4 or 5 years. Like if you want to just look at the Dow, talk Dow for a minute. I'll switch. I know it's not as popular. We just hit 45,000 on the Dow. We're back around 40,500. Okay. I think in 2032, so what's that? That's a 7-year horizon, with probably 50 to 60,000 in the Dow, right? And probably commensurate amount of movement in the NASDAQ and the Spider and the Russell, okay? But what does that say over 7 years? It's already been, you know, 45,000. It's at 40. So a 60 is, and that's optimistic that we go to 60. That's a 50% increase in 7 years. But when you go back, that's only about a 7% annualized return. So I suspect what will happen, we'll have some 15% down years, and then we'll have a 30 up and so forth. But guess what? This whole decade, if we look back on 2022, 2023 to 2032, if you look at, it's not a perfect decade, but if you look at this next 7, 8 years and couple it with what's happened, you'll see that the commodities, gold, precious metals, will massively outperform the S&P 500. So I always say in my last video, I said over the last 25 years, gold, which has no dividend, no yield, if you own gold for 25 years, you had a better total return income, which you don't get any, okay, plus appreciation versus somebody who owned the S&P 500 for that same 25 years and invested their dividend. Now I'm not talking there was no yield max and all that. I'm just talking about the standard yield that you would get from owning a Spider or something equivalent, some of the funds that were out there. But they weren't aggressive like a yield max or something. But they also lose more on the downside, but they're more aggressive in capturing income. So just take reinvested your Spider dividends, gold outperform that. But that's not on people's top of mind. That's over a 25-year. The bulk of that gain was in the 2000 to 2010, which is what I participated in, right? And you always have some nuances. You go back and you look at gold's run, you had 74 to 76, which gold had been moving up. It doubled. Then it pulled back 50%. Then it shot up 300 or 400% in the run up from 76 into January of 1980. So you have these classic, they rhyme. They don't ever do exactly. So in the last two bull market runs in gold, and here's an analogy, right? I should be going through some of the other stuff. So let me do that and then I'll get to this. So let me recap what's happening, the likely outcome. Massive government spending, massive deficits, and huge debt. Over the last 8 or 10, 15 years, 20 years, no matter who the president was, we spent money like drunken sailors. I mean, we've probably been doing it for 50 years, but it really gotten bad in the last 8 years, 10 years. So I'm not trying to pick a political party, but I laugh when I see people that just hating on Doge. Doge is like a last minute if we don't rein in our debt. I don't know how to do it unless we wipe out fraud and waste and all that stuff. But I'm not trying to get political and pick a winner here. You have to change the dynamics. It's like if you have a friend who's got lost their job, they got huge debt on credit cards, and they look insolvent. Guess what? They're going to go bankrupt. They declare for bankruptcy protection, but it doesn't get them out. How are they going to eat? How are they going to do all the rest? So that's kind of where the US is. You can keep on, you're in a different situation. You're the world's default reserve currency, which is part of the reason we got into this mess. We always print our way out of it. Well, you do that until you can't do it anymore. So we're very close to we can't do that anymore because over 50% of our annual interest on the debt will be interest. That number has now, for the first time in history, exceeded our military budget. So, and if you look at the total amount of debt, we have like 36 trillion. Well, that's what we know about. What about the money owed, all the pensions to the government workers that are still working? What about all the Social Security recipients in the future? What about all the Medicare, Medicaid? So when you add all that together, we have 100 trillion. These aren't numbers. Think about that. If a dollar was a second, how long would it take you every second if you got a dollar, okay, to get to $1 billion, a billion, or sorry, a trillion? Like 31.9 years with $1 a second to get to a trillion. That's how big a trillion is. And here we are at 36 trillion, but 100 trillion and sort of unfunded. That's what we're really going to owe. We just don't think of it as pure debt. The 36 trillion is pure debt. So guys, the government is a mess, and all big first world countries go through this. That's why they grow these big industrial giants. They decay from within. You know, the corruption, the greed. I mean, this is on a scale. I'm not even trying to blame a political party because everybody's had their gravy train. You know, every senator, every congressman cares about, you know, their constituency base and or themselves. But the amount of just pure fraud is amazing. Anybody that denies there's not all this massive fraud in Social Security, I think like 10% of the total recipient amount of money is going to foreign controlled entities. They said that 40% of all the phone calls that go into Social Security that are asking to redirect to change the address are fraudulent. Of course. Somebody in Nigeria, somebody somewhere gets an English speaking person. They're digging through these records. They're getting Social Security numbers. They're signing up, right? Whether all these people that are 110, 150, 200, 250 are actually being paid or not, we shall see. But I was amazed at the most recent, where all the Social Security recipients were the foreign people that crossed the border that immediately signed up for a number and started receiving payments at the full amount. So if they're 35, they're getting it as if they're 66. Okay. So is that fair to US citizens? Hell no, it's not fair. I mean, I'm all for helping somebody up. This country was built on immigrants, but hardworking immigrants, not, you know, thugs and thieves, and you didn't have the cartel participating. People literally got on some kind of ship and sailed over to the US, came into onto New York and work their way into the system. Today, it's cartels, right? Saying, oh, okay, I've got somebody down in Guatemala, just pick that, El Salvador. They're poor, they're broke. They heard that US is giving credit cards, putting you up in hotels, giving you Social Security. They raised their hand and the cartels, sure, we can get you in there. It's going to cost you 20,000, but you're going to start receiving 2,500 a month as soon as you hit the ground and you don't have to work. So you're saying, well, they don't have 20,000. So they get indebted to these cartels and these people that we don't even want in the US themselves, the illegal crime and the gangs and everything else. So, all to get a constituent base that one party wants to get, knowing that those people are going to vote for them. So, again, I don't care about your politics. I just care about economics. I've always been, like a savant with numbers. I can see numbers and I understand numbers, right? They're very easy for me. I was gifted with that. Ask me to play a guitar or sing or song. I have absolutely no musical talent. But on numbers, I'm very, very, very savant like with numbers. I see them. So for me, budgeting and paying bills and understand it's just like simple nature. Maybe that's why I like the markets and the study. All right, enough of my rant, guys. But seriously, this is a serious problem. That's why I think we're right at and will go into recession. I'm not calling a depression. I'm not calling a 90% pullback in the market, but 20, 30, 40, 50% at a bottom number from where our top number is very likely. I'll go more with 50%. Now, does that mean in a month? No. But that's over the course of the next 6 months or the next year or the next 18 months. So if you think you're just going to continue in and do what you've been doing, I don't think so. The only thing I would say I'm unsure of, and I'll give you my argument of why I'm not sure it's going to happen anymore. I've been bullish on gold, precious metals. I'll get into why. I've also been bullish on BTC. I'm starting to think that BTC might not make these runs, Bitcoin. Why do I say that? Because the market still categorizes it as tech. Every time the market sets new highs in the NASDAQ and rallies, that sets the stage for Bitcoin to continue. Bitcoin hasn't acted like money. Gold is acting like money, something it's done for 2,000 years. But gold was sitting there idle for quite a while Bitcoin was rising along with Nvidia and you name it, your favorite AI stock and all that euphoria around the Mag 7. That's over. That is over. Okay? You're not going to see that going forward. You'll be lucky if it doesn't go down. I have a target of 48 on Nvidia. Maybe it only goes to 80, bounces back to 120, comes back to 80, and goes sideways for multiple years. But this euphoria around the Mag 7 and all that, the reason I think it's over, I think the world goes into a recession. I think war is out there. The next big, I think April continues down for the most part. Guys, again, when I make a statement, if the next day we rally 8% in the NASDAQ, oh, Bruce was wrong. It's bounce levels, right? It's lower lows and lower highs. That's what I see ahead. It doesn't mean that we don't go, from 6,100 in the NASDAQ down to 5,400 and bounce back to 58. And you go, oh man, we're up 400. We're at 5,800 on the spider. So again, whatever chart you're looking at. But that's what we face. So let's now talk specifically about this. So it just becomes cycles, right? So you had a little bit of false start. Look back in the 70s. Oh, well, the 70s is not now. No, but history rhymes, right? It doesn't do exactly the same. So during this period of time, we were just coming out of Nixon locking down gold. We were no longer going to allow people to turn in their Federal Reserve notes or what we call our currency and get gold for it. Before, it always had that protection. So Nixon removed that. He could see that problem coming. And so gold started to move, right? I was aware of it, but I was just getting out of high school in 1970. I mean, I'm old, but I was very young then relative to do. I didn't participate. I got out of college in 75 and started working. I was already working while I was going to school. I was working nights in a computer room. Um, and so while I was doing that and I got out of school, I'll never forget the 79 run up in silver. I remember my boss was a woman. What was I in 79, like 28? You know, I had just bought a condo, my first real estate purchase. I was single, enjoying life, making good money in high tech, in the early parts of high tech. And I watched silver go nuts, but I didn't fully understand the rationale. I wasn't even really in the stock market. In the early 80s, I started watching Microsoft and started becoming aware of the stock market. Nowadays, people have opportunities to do things. I wish I would have gotten in sooner, right? And would have known about looking at it. Even in tech, I remember many times I didn't buy things I knew a lot about that I should have, right? But let's get into this phase. So what happens is you've got your SPX, you've got your Dow, and then you have alternative like commodity sector. So when gold roars, the gold stocks roar, but they don't always go in sync, right? You get this, call it a 9 inning game from 70 to 80, right? So maybe in the early innings, your big large cap gold and silver miners start to move. And then in this B wave is when all of the little anything with gold or silver in their name goes nuts. You know, it's kind of like the .com bubble when your taxi driver, your shoeshine boy is giving you a tip on his favorite .com. That's when you know the near is in or the end is near. Sorry about that. But also you got that blow off top. Silver always outperforms gold. Look at the last run up in the 2000s, right? I mean, I got in silver and gold and the miners were in 2001. Started picking stocks, you know. I had already learned options, so I started using options. Every time my favorite big gold stocks pull back or silver pull back, then I went in and would sell a put. 95% of the time I never got put to. I just got to keep all that premium, which gave me more money to buy more of the stock. The only problem you have is learning the sector because it's a, you know, the big gold miners already have gold in the ground and they're valued at what they have in the ground. And then how well do they manage expenses? Where is oil? So when oil takes off, there's only two costs for a mining company, two big major costs: the energy to extract it out of the ground and the people's wages. Okay. And that energy factor is all about oil. So if the price of oil is rising, then your cost to extract it. So you have things like AISC, all in sustaining cost. So miners are measured on all this. That's producers, right? So your typical bull market cycle will give you a 3x, 4x move, okay, over the underlying metal. So what you have in these last run-ups, you had about from the bottom of you had a $35 gold price in the seven. I think that's what Nixon in 71 set it at, was $35. You had about an 8x when it ran into the high 800s. Okay. Then you had a long series of time where it went nowhere, just down, down, down. Then you had a 2000 scenario, which I discovered, and we did the same at about 250, 230, 240, depends on where you got in. Gold went to 1920. So you had another 8x in gold. So if all you did was buy gold and hold it, okay, you made 8x your money in 10 years in both cycles. But if you bought your average gold miner, your bigger companies, you did 3x or 4x over the price of the metal on average over that whole run. There's periods of time we've just barely even with the price of gold over the last quarter, and the miners. The miners are so undervalued. Can I say to you that they're grossly undervalued? These things will 20x, 50x from here when we reach 8, 10, maybe 20,000 in gold. So if we take the number over here of 1,000 where we ultimately bottomed, if we 8x that, we're 8,000 gold. Well, I think we're going to go a lot higher than that on this next cycle. I mean, with the level of inflation and debt and the war cycle, we've got a particularly more like the 70s scenario. I mean, I could easily 10, 20. I'm not one of those to say 100,000, but I mean, the world will be pretty ugly, but that's what I expect. This next war cycle is where it really turns to work. Could be as soon as May, guys. Uh, I'm seeing and expecting the metals to pull back in April 10, 15% in the gold price, the silver price. I'm not sure the miners are going to go down that much, though. They're already so beaten down. But then that probably leading into May and geopolitical unrest and, probably Iran. I'm not sure what factor. Hopefully it's not Taiwan with China, but, Ukraine, Russia, who knows. But when this next outbreak, I'm getting a lot of that info from my guru forecasters on world stuff. I mean, let alone 2, 3 years down there. This political divide that we have and this unfriendly, downright mean, nasty. If you'd have told me 30 years ago that your political parties are going to split and those in power were going to be in favor of bringing illegal aliens, into our country, paying them full, you know, welfare, social security benefits over our citizens in order to get a voting base, I would have said, no, not in the US. That's not how we behave. We just argue one side or the other. But this divisiveness, I mean, I don't discount a civil war. I don't even live. I'm living in Asia. I've been retired over here. I've come back to the U.S. during COVID for 2 or 3 years. I was in Mexico for a while. I'll probably live out over here in Asia now since I'm retired and it's a lower cost of living and I have more than enough income from managing my assets. I still own a tremendous amount of physical gold that I keep in the US. I've been able to sleep at night on that. So, I won't sell that under probably $15,000 an ounce gold if and when we ever get there. So, what am I telling you, people? I'm telling you, you want to start to slowly shift and change your thinking of where you're putting your money. So now let me get specific. All right. So I've given you my overwhelming argument that we will be in this next phase run up. What's that look like? Okay. One of the things I can tell you is if I said to you always, when you buy something, is it overvalued or undervalued? Do you want to buy Nvidia when it's 140, or do you want to buy Nvidia if you're bullish and you have a case where it's going to do great, or do you want to buy it at 90? Well, I'd say you want to buy it at 90. For me, I think it's very possible it goes to 48 or 50, and that's probably the bottom, and then it just sideways and moves up again over time when the NASDAQ gets its legs again. Okay. But this is a scenario where they rate gold bugs, which is a HUI index. Somebody just asked me in comments about it. GDX is most popular now, but when you go back historically, HUI has been a good trend. They're both just indexes on gold stocks. Okay, simple. So look at this below 0.10. It doesn't matter. Anything on this chart really below 20 or below 30 when you know it can double up to 60. This is a ratio chart. It says, hey, we all know that gold's gone up 50% in the last year. It was up over 20% in the last quarter alone. So, what you want is you want to own something that has the potential to get re-rated, revalued, and have the world flock to it, which is exactly what will happen. Some of these big miners, they're not even going up. Newmont's a classic example. It's not even near its all-time high, but its profit is massive, right? Anikio, AEM, one of the best performing gold, silver miners there is out there. It's actually been up a lot, but do I think it's going to go up a lot more? Yeah, it's probably got a 5x from here through this gold run. But does that mean go out? I mean, I'll see it go to 110, pull back to 100. You know, if you can get it in the 90s, buy it like crazy. Set on it. I mean, it pays a minuscule dividend, but probably by the end of this bull run, it's probably its dividend will be, 10 times what it is now if the stock's up at 5x from here. So you want to own things that are undervalued. All right. So that's enough of my story on that. Let me show you one more. In a normal bull run, I told you this, the big PM stocks, the big conservative, already have the ounces in the ground. They go up 3x to 4x the metal price. Well, I'm expecting the metal price to at least triple from here and probably go a lot higher than that. Probably it has to go over 10,000. Let's look at a Dow Jones to gold price chart over the last 100 years. So in order to be able to, instead of just make an image of it, I want to show it to you. You guys can go out here in the long-term trends if you want to see this. And we have something known as the Dow Jones to gold ratio. There's probably a spider one. I've seen some of them, but I happen to grab this because the Dow is the easiest. Again, so what do we look for here? Well, we look when these gold cycles start to run. And at the top, we say, well, what's the stock market doing, right? What's the Dow to gold? Well, we see things like mid 20s, right? And by the time gold peaks and gets up to this 890 or something, we get down to a 1.35 ratio. In other words, gold is $890, so that probably means about 1200 on the Dow. But at the just 10 years earlier on this cycle, whatever you could buy gold for, which would have been, $35, you had to pay 700 for the Dow, right? You had to pay 22 times whatever the math works out. So we just finished in 2000 again at another only $250 gold, and here we were at a 40x. I think that we go right back here. Maybe we only go to 3, but we probably go to 2. So what does that math tell you? Well, let's use my example of the Dow going to 60,000. I do think it ends up higher by, say, 2032. But it was just 45,000. Now it's 40,000 something, but it was just 45,000 for a high back in February. Okay. But let's assume it goes to 60. Okay. So what do we need gold to be to get us to, say, a 2-to-1? Well, gold needs to be 30,000, right? So it's not something that hasn't been seen here. So I would say to you, if that's true and gold's going to go to 30,000 and you're going to have a 2-to-1, okay, which clearly we've been there before. What's this number? 1.59, right? What's this number? 1.35, 131. So it's not unreasonable to expect it below 2. So you tell me, maybe let's say the Dow just stays flat and ends up at 45,000. So if we have a 2-to-1, what is that? That's 22.5. So if I said to you gold's 3,200, 3,100, and it's going to go to 22, we've got a 7x left. So where do you want to have your money for the next 8 years? Do you want to have it in the S&P? Do you want to have it in the Dow? Do you want to have it in the Russell? Do you want to have it in your favorite AI stock? Or do you want to have it in precious metal equities? I don't think, I know for me, because I educated myself on it, I retired on this, okay? So let me tell you right now, where within the existing things can we go? Well, let's go over and pull up my handy dandy database. I've got a few different databases in here, but I try to do as much as I can for you guys here. And it's a lot of work. Some of it's automated, it pulls in numbers. Some I've got to constantly tweak. I got to put some more complex formulas for calculating 1 quarter back and some of those things. But here in the net result, I can sort it any way you want it. So I've got all the classic um, yield max, curve, defiance, round hill. And then on top of that, I've got other funds. So I'm trying to cover a broad spectrum of gold, precious metals, Russell, Spider. I'm looking at income funds. I'm looking at some funds that aren't index funds. I'm looking at the base index. I'm looking at leverage indexes, trying to offer up you guys whatever you need to look at. But I'm going to walk you through some of how I look at it. And then I think what I'm going to do is offer a membership, and I'll do live sessions. And if you're a member and you come into the live session, then you'll be able to ask me. I'll do searches built on you. But I'll do enough of these for free to extract and show you what my value is. I'm talking about maybe a $9 a month membership. I have to figure it out. But let me explain to you how I look at this. So again, I got your Misties and your Conies and your Nvidies, and I've got all the yield max. I've got a ton of everything. I got about 120 ETFs in my database. Okay, all of them are categorized so I can get some simplicity of what they are. So look at the Rex fund. By the way, Rex fund has a sub fund underneath Rex, but it takes you outside of the Rex site called microsectors. There are electronically traded NAV pricing on really cool things that use futures and some other things. So for the longest time, or the last 5, 8 years, we've only had gold, GDX, HUI, and we've had some 2X capability. So one of them is Nugget. Nugget is closer to GDX. GDX is your larger cap gold and silver miners, right? Go pull up the holdings. You'll see Newmont, Barrick, Anikio, Nickel. You'll see the bigger, larger global mining companies and precious metals. Okay. Then when you want to see medium cap, smaller companies that maybe have a discovery but are doing a lot more drilling for additional things, and those are a little more speculative. Then you have your pure speculative, what we call juniors. They don't own any ounces in the ground. They borrow money, they drill, they eventually show, okay, all their inferred ounces based on all their drilling, and then they try to get money to build a mine, or a senior or mid-tier company comes and buys them out for their ounces in the ground below the current price, but enough that that company can go in and do it again. Some people are just good at searching and drilling. Some people, like the large companies, are good at managing assets, people, labor, energy, etc. So out of all these, and don't forget, some of my upcoming videos are my favorite 5, my top 10, and what are my top 15 mining stocks over the next 3, 6, and 12 months. All right. So I do a search here on what we care about. I track the current price, back 3 months, back 6 months, and back a year, if they existed, like Babo didn't. Okay. But what am I searching on here, and what did I limit this? Well, I searched on 3-year total return. Sorry, 3-month total return. I don't do any multi-year. Longest I do is 12 months or 1 year. So anytime you want total return and there's income involved, there's two pieces, right? There's the NAV appreciation, and then there's a dividend. Well, some of these don't pay a dividend. GDXU, what is it? It's micro sectors, 3 times GDX leverage. What did that stock return in total return over the last 3 months? 91.16%. Not bad. That's 273%, guys, annualized. All right. So you can see it right here. 3 months ago, the stock was 30.64. I traded this. I'm out of it right now. I last got out in the low 60s, right? I had bought it in the high 40s and I flipped it over about a 10-day period and made a great return and said, I don't know. I mean, it's been back and forth to mid 50s since then, back up to 60. I mean, yesterday was super volatile. So I think gold could inch a little higher. I think 3,200, 3,225, probably maybe 3,250. But again, that's like trying to call the top. We're very close to the top in gold short term. Then I think we pull back. And again, is that pullback 2,900? Is it 2,800? Love to see 2,700. 2,700 would probably be the buy of the lifetime because I think we turn around and explode in May with this geopolitical and we go on up to 34, 3,500, which may be the top for the year. It depends on how ugly the war cycle and how much conflict and how low the stock market goes, guys. See, not all times when the stock market, sometimes when the stock market gets hit, look at 2008, stock market got hit hard. Gold got hit hard. The gold miners got hit even harder, but they had run up all through that decade. That isn't the case this time. We've had this period over the last month where the gold miners have shined, okay? And no pun intended. The gold miners have shined because they're finally waking up and barely outperforming gold, which is a breakout in itself. Normally, they should be at 3 and 4x. They've been massively underperforming. That's why a lot of people don't have confidence that the gold bull market is here. I see it. I see it on the micro scale, the medium scale, and now I'm seeing it on a larger scale. That doesn't mean, go dump everything right now all in, right? Use intelligence when you go in. But I'm going to tell you things I would not be in right now. All right. So GDXU, what is it? 3x. I don't recommend, guys, if you're trending down for a month, don't go out and buy a 3x because you're going to lose your shirt. You can go down 20 or 30%. This thing can go back to $35. Just be aware of what's going on. But over the long run, you use this leverage when they're breaking out again, when they're doing something positive. So, and let's verify that. So first off, if these things are based on GDX, I have the base in here is Van Eck GDX, right? You probably know something called GDXY. When I heard that it was first coming out, I was like, yeah, get into GDX. Over the next 5 years, you'll be very happy. Nothing changed, except I saw how Yieldmax managed it. And to be honest, NVIDIA, Misty, Coney, all the traditional AI and FOMO stocks were still moving. It wasn't time yet. But what's happened is GDXY, like I mentioned it in Kev Butler. Hey, Kevin, a shout out to you. You said something, well, I don't know about GDX, Bruce. It's been beaten down. But he's looking in the rearview mirror. It was $20 where it came out, like all the stocks were then, not the 50. And it got pushed down within a month or two to 15, $16, went down to 14. But over the last month, it's 3 months, it's stabilized and it's up into the 16s. Okay. 1605. So what is our 3 month total return? Well, this thing does pay a dividend, right? So the 3 month yield is 1373. So when you add that, you get 20. So it's only up 9%. As we all know, this doesn't really pay any income, or it pays like once a year. It's so minuscule, right? On GDX. You're not in GDX for the dividend. Eventually, in these big up years, when these miners are exploding and increasing their dividend, you may have a 10% annualized yield just owning GDX, but then the stock is probably up 80 our index is up 80 or 90%. So it's going to have those go bull years ahead of it. I see 60 in the next run up. It doesn't, will we go back to 38 before then? Maybe very likely. And then we sprint up to 60. And then I see multiple iterations beyond that. I don't know what the top is, but it depends on what goal's at. You can figure it's 3x goal from here out. So if goal is probably 150 is where it's eventually going to go. So GDX, all right, was up 29.37. That's just a boring up and down all the time. But look at that. These are your top out of all your funds. Where's Misty? Where's Coney? Where's all these other things over the last 3 months? They're nowhere to be found, guys. Where's your YMAX and your YMAG? They're nowhere to be found. Why? Because they're on the wrong side of what's moving right now. But you guys want to go out there and you want to look out 10, 15 years and think that that's your thing. I think things are blowing up all over. So I'm trying to get my stuff out here and trying to save some of you from just making big mistakes out there running on, taking your home loans on your equity. And who knows where real estate doesn't look very good going forward, even on real estate, guys, the next 3 to 5 years. All depends on the recession and how deep this goes. All right, so let me go through some of these. So you got a 3x on GDXU. What's Nugget? Well, Nugget is a 2x, right? It's a GDX 2x. So how is it trending? They don't always hold that line, but that's about 2/3, right? If this is one GDX is call it 30, this is 60, and this is 90. They're holding up to how they were constructed. Okay. And look at the 6 month total return. What does that tell you about GDX during that period of time? Well, look at here. It only did over the total last 6 months 14% because it was beat up during that period of time. That's why GDXY has changed so much. But you're never going to make the same amount of money in GDXY that you're going to make in the underlying, the old adage goes, right? They're going to pay you some income, but you don't want to be in GDX. But I think it's safe to say if you really need some income and you want to set on it for 3 to 4 or 5 years, GDXY is okay. But there's some other alternatives in here, okay? And one of them is called Y Gold, right? You've got a leverage on 1.5 to gold. It pays a little bit of income, but it didn't do quite as well. I'm going to watch it going forward from Simplify. And look at the other performance. Let's go through something that's not gold or silver or precious metal. Okay. So these all are 3x GDX, 2x GDX, shiny based on gold alone, 49% return, 86% over the last 12 months, because it's a playoff on physical gold, a leverage play on physical gold. What else is performing? Course. SQQ, anything that's negative, the QQQ. So pro shares, that gave you a 37% return. Look at the 1 year. You didn't want to be negative the QQQs over the last year, but over the last quarter, and I expect over another quarter, second quarter should give the same kind of results, very likely. Okay. What else? Babo. Why is Babo up when the markets are down? Because it's Chinese. The Chinese stocks have been very undervalued. They've woken up a month ago, 2 months ago, 3 months ago, and they're outperforming. Will that stay? I think so, because globally they're undervalued for what they are. It's like, DeepSeek. You're buying these things at a super discount. What else is doing good? As you'd expect, the crash funds, right? The inverse funds, the dips, the fiat. Look at this crash, dips, fiat. YQQ, the negative on the Qs. But again, these guys not going to be your best performer because they focus on paying a yield, right? So they've got a 9%, 9.67 total return, but 6% of it came from their option income. So guys, these aren't things you can always predict. Here's what if I had to sum it all up to you. You say, well, Bruce, I'll just build a portfolio of all the inverse funds and get in the metals. Well, there's going to be periods for 3 months that you get the shit kicked out of you in the NASDAQ and that. But, it always looks like, say you go from, whichever spider, you go from 5,500 and you drop to 48. Then you spend 3 weeks going back up 50% of the drop. So you went from 55 to 48, 7,000. So you got back to 51.5. And then you spend 3 more months going back to 48. Maybe you go to 45 this time. So overall, you were down. But they're volatile. So that can give you a little bit of income too. So there isn't a perfect solution. Where are people skating to? You want to go to where people are skating to. I can tell you there are three things. There's safety. Gold right now. That's going to change eventually to silver. And silver will, from where we are now over the course of the next few years, silver with 3x a percent gain that gold has. It isn't happening yet, right? It will. It's just what happens in the gold silver ratio in addition to some of the other ratios. Gold is trusted by people. Silver isn't exactly money. It has monetary base. Just go back to the old dimes and quarters and all that have silver. But silver has industrial use. It gets consumed. All the gold that's ever been mined exists on Earth, right? It's still just rare. It still costs a lot, right? It's still you can still buy a suit in gold over the last 2,000 years for about the same amount of money, right? A fine tailored suit in the world. Whatever it took of an ounce of gold, that same percentage of an ounce will buy it. So it holds its value over the long, long term. It can get out of kilter, right? It can underperform the SPX for a full decade. And you're like, why would I want to be in that sleepy, dull old gold? Right? Well, you don't say that over the last 6 months or a year. And if you look at what's going to happen in the next 5 to 8 years, you wouldn't say that either. Okay. So it doesn't mean that may not be an AI stock that goes up 6x, but there's probably going to be 100 of those in the miners that do the same thing. So they're going to be a lot easier to find. All right. So let me try and wind this down with you guys. So fiat, you've got hard and other commodity based. Some of these, you've got comb in here from granite, which is commodities in general. So look at here's a gold one, silver, a 2x silver, right? UBS is silver. And finally, you got comb, which is commodities in general. Its 3 month total return was 5.67. Look how far you have to go. What happens when we start getting into 3 month total returns when they go negative? You got Clip for Crane, you got SMCY, Hips under Granite. Now, Squee, for some reason, I can't get current quotes. I mean, older quotes, and it's been around. I can get today, so something's weird with that. QDTY, these are too small, right? They're only been reporting for a month or two, so you're not going to get your 3 month stuff. But look at this. We all start negative now. Minus 31, minus 69. Even SCHD, minus 0.97. JEPI, right? These are the best of the worst, right? They're the best of the negatives. Snowy, 481. Misty, all you guys that, hey, look, I've been in Misty. When it first came out, I owned a lot of it, made a lot of money. Watch it go from 45 back to 20, but I owned it at 20. So I was like, look at all that money I captured. In about 7 or 8 months, I got all my money back that I paid for it. But I've been smart. I'm staying out of it right now. So back to one of the things I said to you guys, and I'm going to let you go. I said, I don't know if BTC is going to continue because I can tell you near term, 2, 3, 4 months, the NASDAQ is not going to go back to new highs. At least it's 95% probability it won't. If we go to one more high, 6,200, 6,300, 6,400, something, right? Then that becomes the new high, and all the things I'm saying to you just becomes the final top instead of what we think is the rollover top now. We're just too far in the teeth. We're 12 plus years extended in a bull run that we haven't seen like this. We've had bear runs. Anybody that go look at the 66 to 1982 bear run. Basically, if you were in the stock market from 66 to 82, anything that tied to the averages, you were flat. You made no money. So, guys, it's changing. The landscape has changed. All right. So, give me your feedback in the comments. I'm already way too long on this thing. And let me know what I can do further to help you. Somebody's asked me about margins. My tennis chess lover. Thank you for that. I will get to that. I will explain margin. She said, Bruce, can you explain margin? How does it work? How should you use it? How can you protect yourself if you're using it? It's complicated to see the least. When you have this volatile market, you generally don't want to be using margin. Okay. Think of margin, it's no different than in real estate. Okay. What happens when you think there's a bull market in housing? What do we typically do? Well, if the lending environment is good, we can get away with 10% down and borrow a mortgage on 90. I know that got real strict. It changed after the mortgage default thing in 2008, 2009, right? But let's say it's even 80/20, and you've got you're a millionaire, multimillionaire, and you're like, "Oh man, I got a tip. Real estate's really down in value. It sold off over this next 5 or 10 years." I don't believe that right now, but let's say I did. Then real estate's the perfect leverage. You get a renter in there, you put 20% down, and the bank gives you 80% at whatever mortgage rates are. And then if you truly are going to appreciate, you're making money on all of that. Think of it as margin, but on all that leverage. So margin is nothing more than leverage. Say I got $300,000 in my stock account. I got $150,000 in stock and the rest in cash. And I'm not talking about highly speculative stock. All these yield max income funds, they at time you're given 100% credit. Say you own Misty and you got $50,000 in Misty. Well, there's times where they say, well, we'll give you 50%. If you got 50,000 in Misty, we'll let you borrow 25 more thousand before you quote get a margin call where you have to pay down. Okay. So it's like a checkbook against what the value is. But see, when you get a home mortgage, okay, and you're paying that payment, you have a fixed payment if you get a fixed loan, right? Well, what happens if the real estate market goes down 50%? Nothing really happens to you. You just keep paying that same mortgage payment on a fixed payment. But if you lose your job and you can't pay it anymore, right? So you have all these factors. And what happens at the very worst time when all the fear and greed and all the craziness in the market happens, the regulators go out and they lower your margin capability. They say, oh, we're only going to let you borrow a third of Misty's value. Well, Misty say has dropped 50% during that period of time. So you have a margin call. You pay up or they liquidate Misty shares. So like I said, they sell it at exactly the wrong time. So really smart people go out and they look at how much income and equity value they have in normal stock that are 100% marginable. And they borrow like 10% if you want to borrow, and only do that when you're absolutely sure about what you're investing in. If it's another highly speculative thing, don't even think about margin. That's why I think it's foolish to play these high stakes, high income, Misty, all that stuff. It's great when it's going from 74 to 108. It's not so great when it's going from 108 back to 74. That's exactly what's happening right now. And so people, and they think that they found, the fountain of youth. They think they found something new. Risk has been around a long time. Margin can be very good at small doses in the right time. And so I'll do something and I'll show examples in spreadsheets of how you calculate it, how it works. But I just wanted to give a large or just generalized overview. All right, I need to quit talking, guys. I could go on and on. You guys know when I get on rants. But this is an opportunity of a lifetime to zero in on something for the next 4 to 6 years, guys. It's not going to be perfect. We're going to have goal, maybe it gets to 35 and that's a top this year. And then maybe we go back to 3,000 in the beginning, and next year we end up at 5,000. There'll be another pullback probably to 4. And you that bought it at 48, when it goes back to 4,000, you're not happy, right? But you're going to want to own miners. You're going to continue, and that's why I'm going to do details on them. But suffice to say, there are ways to get little bits of income in here. And we just need to go over and look at our yields and try and find those. I mean, GDXY is giving you 19% yield and 13% yield over the last 3 months and 6 months. But that yield had a negative here. GDX wasn't performing on the 6 month basis. So it gave you 18.91% yield, but that means it lost about 13% in its NAV. But I think it's safe to say that year over year in this thing, it's an okay way. I think there'll be some better ones. Um, I think this Y goal is going to start paying. I got to go in and relook at that. All right, guys, there'll be an awful lot more stuff for you. Again, this is Bruce with Targeted Wealth Creation. Have a great Friday. Have a great weekend. I hope you're not one of those on margin that are fretting out and all the rest. Just be wise. Take your time. Absorb what all I'm trying to tell you here. Start to make a change in what you're doing. Money is flowing into bonds. TLT right now is doing well. It's always moved somewhat into utility stocks for safety. Clearly gold. But the bigger picture is we're in a decade of commodities. Right now, uranium is down. The uranium miners are beaten up. If you want to go own URA or URNM or some individual uranium stocks, I'll talk about that. Energy is going to become more important in these war cycles. Right now, in the first inklings of the recession, oil gets beat down, but then people are going to realize they need it. All right, guys. Bruce from Targeted Wealth Creation, not a financial advisor. Have a good one. Talk to you later. Bye for now.